What's up, guys? Welcome back to another episode of Rawstocks. This is Rustic. Today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the description below. We're well on our way to 500 viewers. We're going to be giving away a Rawstocks t-shirt or tank top as soon as we get to 500 YouTube subs. Also, 7-day free trial on the Rawstocks Discord for the premium membership that includes the Rawstocks callouts. So let's go ahead and jump into the charts here. We had a nice big sell-off after we got up to 260. Right as we hit 260, we sold off, and we didn't look back at all the rest of the day, just straight up dumping. There was a point where it tried to have a little pullback, and we'll see that in the charts as we get to the lower time frame. But into the end of the day, last 2 hours, just boom, dumped. Basically closing at the low of the day, maybe just a little bit shy of it, but nonetheless, we've been watching for something like that. You see, every time we start to make a rally, we get kind of dumped on, right? Make a rally, get dumped on. Make a rally, get dumped on, right? Make a rally, we're getting dumped on. So it's no surprise. We've had a couple good days, a week of decent movement with Tesla, just like over here. 1, 2, 3, 4, right? 4, and then it initiates a dump. 1, 2, 3 initiates a dump. Traded sideways, but we caught a 1, 2, 3, right? Initiated a dump, right? Now we're at a 1, 2, 3, 4, 5, initiating a dump, right? It's not incredibly difficult. We're just we're in a bullish move here. We haven't taken the top here yet at 268.65, but we're just seeing a similar pattern playing out where we're seeing multiple days kind of trending up, and then we're initiating a dump. Basically just clears up liquidity. What we do want to notice is that we're still above the 21 SMA, and we're down now into this daily fair value gap right here. That's from this wick high to this wick low, daily fair value gap. So we've seen price go off of it, and we're right down by the 21 SMA. So we might get one more down day, and we could still maintain this bullish structure that would just push us up to this 268, 269 level. So don't count Tesla out yet, right? Not a surprise that at 260 we dumped. There were a lot of calls that came in this week at 260. And so, profit taking as well. We saw this break, right? We saw a nice run up. If people who bought down here for shares or 2 weeks out contracts, they made a nice profit here. Liquidating shares from 228 all the way to 260. That's a pretty decent move. So profit taking is normal. That's most likely what it is. Not necessarily at this point sold that we're coming back down into like the 220s, but we could definitely see us come back down to like 240, even a fair value gap right here down in the high 230s. And that wouldn't be something that would be off the table. Now, if we start getting through this fair value gap all the way underneath the 21 SMA on the daily, that's a different story. We start talking about running down to test the 228, potentially even lower. We got these fair value gaps, we got order blocks, right? This order block here on the daily time frame, we've already traded back down to it. So next time around, we'll probably take this order block out if we get down, to the 231, 232 area. At that point, we'd be targeting this order block here, then this order block here, and these fair value gaps. So we'll be watching all of those things. But right now, we're looking for a bounce on the 21 SMA. And come tomorrow, that 21 SMA is going to be about 243.60. So we'll see if that holds or not. We want daily closes below if we want to, and then a following day confirmation if we actually want to confirm this move. Anything else is not confirmed, because you see on this candle here, we closed. We came down, tested it. We closed one day right at the 21 SMA, right? We even gapped down, traded down. That was FOMC day, and then ran up back up to the 21 SMA, and then we blew off of it. Okay, so we need confirmation, right? This one day below, and then we would have needed a second day. So here, we're looking for at least probably 2 more days if we just sell down to get a close below the 21 SMA. At that point, you could look to enter short, a longer position short, or you could look to see if we back test the 21 SMA and then see if we get a further dump from there. We could also draw a trend line if you guys want to check out what the trend line kind of looks like. But if we could connect lows, low to low, right? We could still come down, test this, and bounce, and still see a move back up to 268, 269. So we also are looking for below the 21 SMA trend line to hold. That'd be taking out these fair value gaps, right? And then again, if we broke that, took the low, we'd be targeting this order block here. So we can leave that trend line up if we want. Let's go ahead and check the 4-hour time frame. 4-hour time frame just shows that nice 4-hour candle that sold off, and then into after hours, we've seen a little bit of movement up, but not much. But second half of the day just sold off. First half struggled. Right, this was the first hour, or the first 4 hours. Struggled to see much movement. Bam, just done from there. Didn't quite get up into this order block. We've also been watching. I took it off. There was. Oh no, it is this 4-hour order block. Yeah. So we got this order block showing from our indicator, but we got another order block that's showing this one. And if you look at this order block, we traded up into it. So oftentimes we do see a rejection on the first attempt to get into the order block. Cycles back around. How far it cycles, unknown, but then usually attempts to push through the order block again. Bigger the order block, harder it is to get through there. So let's look at the 1-hour time frame as well. See, 1-hour time frame has the order block back up here, right around 266, 267. And so we didn't quite get up into that one. Let me turn some of these other indicators off that we'll look at later. But we've also seen a market structure shift here. We saw a market structure break. Oftentimes we see it's usually 1 to 2 market structure breaks after a shift. So we've seen one right here. Wouldn't be out of the question to see us push back up into this order block, back up to our targets that we have, and see a second market structure break, and then price might decide to roll over again. So right now we're just kind of looking at this trend line. On that higher time frame, we got the 21 SMA. Now on the 1-hour chart, we are below the 21 SMA here. So we could see, let me draw it out for you guys. Could see this pop up tomorrow, test that 21, come down here Thursday into Friday. All right, let's see this. Let's see where Monday is. So Monday is here, right? So also want to recognize accumulation, manipulation, Tuesday into Wednesday. Now we're catching distribution. I don't expect a reversal. I expect a continuation. So I do think we're going to come back down, test this trend line, maybe even get into this order block, break the trend line, and then make a decision from there. But it wouldn't be abnormal to see us pop up here, test this 21 SMA that's now pointed down on the 1-hour chart, find a resistance on that 21 SMA, and then continue back down to test this trend line. Alternatively, we could just see. Hold on, let me grab another path tool. Alternatively, we could see something like that where price then gets over the 21 SMA and it drives us all the way into that order block. So that's not off the table either. If this is just pure profit taking as we got up to 260, then we might see price continue to drive up. Maybe it was just a shakeout of some shareholders, retail, make them scared with one big old candle, get them to sell their positions for a discount, and then see price continue to rally up. You saw it market wide, so it wasn't just Tesla. So it was just entire market manipulation, orchestrated. Oftentimes, again, that's to shake out long positions, to shake out call holders, to shake out shareholders, all that stuff. Also get you to think that, the direction's going in one way, they rip it around, ends up going the other way. So we'll just have to see if we find support or rejection here. On the 1-hour, you also see a new market structure shift. So we had a market structure shift here, market structure break. Now we got a bearish market structure shift. So we'll see if we get continued downside, and then we look for a second market structure break, and then potentially a third market structure break. We've talked about this before. Here we got a market structure shift, then a market structure break, right? Market structure shift, market structure break. So we're typically looking for the trending ones to have at least 1 or 2 market structure breaks after the shift, or counter trend. We're oftentimes just looking for one shift. So you see here, right? This is a bullish move. We see a market structure shift. We see no additional breaks. Okay, this is a bullish move. Market structure break or shift, market structure break, right? Here we got a market structure shift because we're in a bullish move. We're not expecting large downtrends, so we're not expecting an additional break. Okay, then we have a market structure shift, market structure break. So, and now we've got one market structure shift. Doesn't mean we can't like both of these. You see nice big sell downs continue until they find support. So, market structure shift, drop down, find support, continue up. We'll get a bullish market structure shift and then another market structure break as we continue to the upside, unless this is a entirely full trend reversal, and we will then end up out of this bullish trend. But what I'm expecting is a drop down to support and then rally back up into the 260s, 270s. Last couple charts, we'll look at the 15-minute chart. 15-minute chart just shows some fair value gaps that we'll be watching. Starting to see some evidence of bearish activity with bearish fair value gaps. Again, 21 SMA, wouldn't be surprised to see us come back up here, test one of these fair value gaps, dump down here, maybe even dump down here, right? There's our support line. Got some fair value gaps to take out. We know it'll be magnetic that we get pulled up here, but do we take these out first and then pull up into here, or do we pull up first and take them out? So we'll be watching both of those tomorrow on the 15-minute time frame. Last thing I want to show you guys is a silver bullet setup. I don't think it was an incredibly clean one today. We'll take a look though. What we do want to recognize. Oh no, maybe it was. Yeah, it was. It wasn't a bad one. Okay, what we want to recognize is, let's see. You could say, well, we had our previous order block on there, but you could also say here's a high time frame liquidity target, and then let's go back to what was it, the 4-hour time frame, and we'll mark off. So on these silver bullet setups, you're looking for high time frame liquidity targets to be taken before the silver bullet happens. So let's look at this guy, and we'll change it to the blue color in a minute. Okay, but I want to notice heading into the silver bullet. All right, now the 1-minute chart. Okay, heading into the silver bullet time macro, we take our previous high from Monday, which is this top line here. Okay, so you can see that we take that and we trade into the 4-hour order block. And I think on the 1-hour chart, there's also an additional order block that's somewhere in here. So you could say we took out the high time frame point of interest, and then we got our London. We'll put our London low here. Okay, so we saw our accumulation. Now we saw our manipulation, right, to the upside. Then we're looking for our entry using the ICT Smart Money concepts. And so we will identify that a top occurred, and then we identify a bottom here. Okay. And then we see that price trades right back, and we show this all the time. Price trades right back to the 70.5 or the 70.5 Fibonacci level. That's the optimal trade entry range here between 62 and 70.5. Trades right to it. Okay, and then we get a delivery to the downside. Also, if you have a really good eye, you see that there's that as we break this wick right here. Okay, this is a micro change of character. There is a tiny fair value gap that gets laid in there. So some of the things before we look for the retracement, we look for a change of character with a fair value gap in or around that change of character. Then we look for the return or the fib level retracement from the low. So that one wasn't as obvious as far as the fair value gap goes, but it was a nice one nonetheless. Now, if you missed that one, what you could have also done, well, first I'm going to show you how it played out. Okay, so say you caught that one, then where do we go to? You can see that price went directly down to symmetrical swing outside of the silver bullet setup. So there was your move. Let's see what it ended up being. Let's say you just got somewhere in between there, all the way down to full symmetrical swing. Stop would have been above old high, 4.48 risk versus reward on that full trade. If you would have only taken it back to the normal spot there, we would have got almost a 2-to-1 risk reward. If you would have gotten your entry perfectly at symmetrical swing, it's a 2.2. So typically we see these 2-to-1, roughly 2-to-1 risk reward ratios on the minimal the minimum play out of one of these. Now, what I want to show you is if you also miss this entry, okay, we also have a bottom here and a bigger, more obvious fair value gap here with a retracement. So let's see what that looked like. We had a high here. We had a low here. We see price trade back up into the zone. It did not quite get back up to full optimal trade entry, but again, break a character or change a structure right here, fair value gap, return to optimal trade entry zone, and price gets down all the way on this one to full symmetrical swing as well, just by a little bit. So if you're tracking both of those nice big swings, after that we just kind of traded down, but both of them were really great entries. Both of them happened inside the silver bullet time macro. Let's just double check here and see what the risk reward ratio on the minimum was. You see nearly a 2-to-1, right? And if you hit it for the full symmetrical swing, you got a 4, basically a 4 or 5-to-1 risk reward ratio. So continue to learn how to manage and watch those silver bullet time frames, because there are awesome trades inside that 1 hour macro where you could basically just take your position. You're not having to sit around and wait too long, right? That first one hit, if you would have taken that entry 10:30, it hit at 11:30, so 1 hour trade would have got you a nice full symmetrical swing on that one. You walk away for the day and not have to trade anymore. Or if you caught the second entry, right here, 10:45 to 12:30, so less than an hour and a half, you would have also had a nice trade there. So just less work to have to sit and monitor it all day long. And you can also see our London low. So that final, if you got the first entry and you were willing to hold it and be patient, targeting the London low, we got all the way down there, and I guarantee that would have been a massive, like maybe 10-to-1 risk reward ratio. We could look at it real fast. So you got entry here, London low, 8-to-1 risk reward ratio all the way down to London low. So that would have been just a smashing trade. Looks like a almost $4 move on the stock, so would have been sweet. Anyways, hopefully this has helped you guys. We'll continue to cover the silver bullet setup on Tesla, as well as daily chart analysis covering multiple time frames. So don't forget to smash a like, subscribe, share with all your friends. We're helping grow the channel, helping grow the Discord. It's all growing very quickly, but it seems to be doing really well. So I appreciate all the support, and we'll see you guys on the next one.